For the African, securing an education often means student loan debts. Coming from a background of colonization and slavery, many have struggled to get an education and then get to pay the large student loans they carry with them through life. The Biden administration's promise as they made their way to the White House was rooted in a promise to provide debt relief, especially for student loans. But all the promises of student loan relief have met with challenges from the courts until recently the SAFE plan was instituted. Are you aware of what's in it for you? Welcome to the Summon, the African Summon, where we connect you to Africa and African culture. Today we'll buy away from culture to talk about money. And we have Maisha Davis of Operations Hope to talk to us about the new program, which has a lot of promise, especially for you, the people of African descent. Welcome, Maisha.
Hi, thanks for having me.
All right, Maisha, I would like to know, tell us a little about yourself and where you come from in Africa.
So, of course, I'm Maisha Davis. I am a financial well-being coach with Operation Hope. I have been in the financial industry in banking as a lender for almost 10 years before coming to Operation Hope, and originally born and raised in Detroit, Michigan. Last year, my sister decided to do our African ancestry DNA. And our African ancestry, the portion that was African ancestry, came back as Nigeria. So that is our African ancestry DNA, Nigeria. It was actually 50-50. It was half Nigerian, half Portuguese. So it was very enlightening to learn that is our lineage and our heritage in Africa. And we were really excited to get the news and to learn more about our origination in the earth, not from the United States, but from the mother continent, Africa.
And with that said, you've got to meet our brother, Dynast. He has a program that's taking people to Nigeria. So I'll be sure to talk to you about it after this. Okay. So how important is education for people of African descent?
So education is our window to the world. As African people, as African American people, education will open up your world. I will say growing up, I did not grow up in a financially savvy home. I was taught finance as I became older. But as a young person, my grandmother, my father's mother, God rest her soul, she would always stress education. I had cousins who were financially wealthy, but we were not. And she would just very bluntly, she would say, you guys don't have it like your cousins. You are not being raised like them. You don't have the money that they have. If you want to change your situation, you're going to have to get your education. And I appreciate her not sugarcoating it. And because of that push to get education, it has in fact changed our situation. And I say I mean my brothers and sisters and I, who she was talking to. It changed our situation financially. It drove us to be the best that we could in education, and it has improved our standard of living. And when I heard one of our other coaches in a workshop say, when I have money, I have peace of mind. So you may not have all the money in the world, which most people don't, but to have the security of knowing how to better your situation, it will give you peace of mind. And that happens through education, and not just having the education, but applying the education that you have. So that is very important for African people, African American people, as leaders in different industries, as leaders in our countries, in our world. the education piece is of the utmost importance because it opens the door for our natural God-given talents and abilities, and lets us impact our world.
How accessible is education to Africans?
So African people have a lot of access to education, whether it be in the States or whether it's abroad. The opportunity for education is there. And so is the financing in education. And then the financial education is important. So you have access to funds that you need in order to continue education, but it's very accessible to those who are African and who are African American.
So, what avenues are available for financing and education for people of color?
So there are, of course, always extensive scholarships, private scholarships, public scholarships. There, particularly in the States, the Pell Grants. Pell Grants are have been expanded and extended. One of the continuing benefits of the Obama administration was the strengthening of community colleges. Community colleges are very affordable. They're typically very affordable. They're typically very easy to access because they're right there in the community. It's not somewhere that you need to go figure out housing to go to. It's usually right there, either where you work or where you live, easily accessible by public transportation. And then the cost of community college is very affordable. And it was, like I said, it was made very affordable through the Obama administration and continues to be more affordable through the Biden administration. And it also is a stepping stone. A lot of people start off in community college and are able to use those credits and the education that they receive there to step up into a more traditional 4-year institution. And a lot of the times having that community college education will help jumpstart or open the door to more financial benefits to be able to afford that 4-year institution. So it's about doing the research. It really is about researching and being open to what's open to you. So if you're in engineering, I know there tons of engineering, science, scholarships, medical. Those areas tend to lend themselves to a lot of financing that's available that is grant. So you don't have to pay that money back. You're not necessarily in a loan situation. That's not to say that loans won't need to be taken out, but you can typically find a lot of financing available through STEM programs, so science, technology, engineering, math. When you get into those areas, you can typically find a lot of financial aid available that you don't have to pay back.
So through Operation Hope, do you offer counseling on how to get financing for an education if someone reached out to you?
So I'm glad that you asked that question. At Operation Hope, we do not focus on student aid. We focus on financial literacy. And I encourage my clients to start financial literacy even with young children, even at a young age. What we do is we offer clients a way to increase their personal credit, increase credit score, decrease personal debt, increase personal savings. Those are the 3 cornerstones of Operation Hope. That is our focus. We want to help clients because if you can increase your credit score, and decrease debt and have a personal savings, the financial world is wide open to you. Whether it's no matter how small your financial goal is, no matter how large your financial goal is, if you can get those 3 cornerstones, one of the phrases that we use a lot at Operation Hope is silver rights. So we hear a lot about civil rights here in the States. but also your silver rights, your right to gain an income, your right to gain wealth. That's what Operation Hope is geared toward, helping clients to gain access to their silver rights. So if you have good credit, you should, the conversation then becomes not can you get approved, but how much will your interest rate be? How low can you get the interest rate to be so you're not paying as much money on the money that you use to gain that wealth, with whether it be through a home, whether it be through a business, being able to keep more money that you earn in your own pocket and not paying that money out in higher interest rates or fees. So that's what we gear our coaching toward. It's important, and I will say, as a former college student, because I went to a 4-year institution, it's not one of the, it was not one of my focuses. Like I said, we grew up, for lack of a better word, we grew up poor. We didn't know anything about money and being savvy about money and budgets and credit. We didn't learn that growing up. That's not my mother's focus. Was she had 4 children and she worked to feed her children. So she was not the sitting down talking to us about budgets and how to save money, and this is what a credit report is, and you should be concerned about your credit. We didn't learn that. Well, I learned all my financial lessons the hard way. So that is one of the opportunities that I take a lot of pride in at Operation Hope, is to help people not have to learn those lessons the hard way. And college is a great place to begin. If you haven't had it younger in your household growing up, college is a great place to begin learning about how you want to manage your money and finances. Because when you go to college, typically most college students don't have established credit. One of the first things that they offer you when you go to college is get this credit card. You're 18, you can apply for a credit. Typically you're 18 when you go to college. We have some people who are very smart and they go at 16 or, but 18, apply for a credit card. You don't know how to use a credit card. You don't understand the rate. You don't understand the payment schedule. You don't understand.
You're in trouble before you could
You're in trouble. Right. And the way the American system is set up, it is not set up to protect you financially. And you have to have that financial literacy, that financial education to protect yourself. So going to college is a great time to establish credit. It's also a great time to learn about how to manage your budget and your finances, typically because you don't have as much, because students don't have as much access to money. But it's a great way to start to develop those good money habits, because you're doing it on a smaller scale before you blossom into a larger scale.
Makes sense. So ideally, financing your education with cash would be the perfect world. Could you tell us a little bit, just compare the Black kid, the African American kid, with the white kid, and what kind of advantages or disadvantages do they come from in terms of facing the cost of education with their backgrounds, with their I'm trying to create a picture before we get into say, for people of color to really understand what's at stake here. So help us understand. I mean, the ideal thing is pay for your education out of pocket, but how realistic is it for the African and African American with their history to be able to stand at that same place as their mates at school?
I'll use my personal experience, and it's been a while since I was in college, but I'll use my personal experience. What the difference that I noticed in school were students who had access versus students who didn't, whether that be Black or white. Their I did see Black students who had, for lack of saying it very bluntly, I saw Black students who had money. Their parents would pay their tuition and pay for the books, and they would have cars and nice clothes, and they were in college just like those of us who didn't. It's about access. Ideally, yes, you would want to graduate college without any debt. And there are some people who do that, whether it's they have scholarships or grants, or their parents are able to afford. I will say my experience was that the majority of the students who were able to graduate college without debt or a lot of debt or mountains of student loan debt, they were white students. But there are, like I said, in my experience, having grown more from college, it's the difference between having access and not having access. Even if, and I'm confident in saying this, if my family had access to financial education and had utilized that access to financial education, I'm 100% confident our situation would have been completely different. My situation would have been completely different going into college. In college, I currently do still have student loan debt. I usually typically during college had 2 jobs to help pay for everyday expenses. And I received Pell Grants through financial education. And the difference is the access. I am certain that had I had the correct financial education and utilized it, I may have picked a different school. I may have picked a different course that was more conducive to my financial situation. So I went to I was recruited by a private, small, predominantly white institution. And private education is very expensive. I didn't have the knowledge to know this is probably not a good choice for you financially because we were broke. We didn't have any money. We definitely could not afford private education, but we were recruited. I had excellent grades in high school.
I was about to say that. I was going to say
I had excellent grades in high school. I did very, very well on the standardized testing, ACT, SAT, because that was my driving force for my grandmother, get an education. But the financial piece was not there. And I didn't know, and I didn't have the guidance from a parent to say, we probably shouldn't go to this private institution. We can't afford this. You wouldn't want to have to take out this amount of loans. And then over the years that those loans gain interest, and then there's, whatever penalties and so it has been a learning experience. And as a mother, I would never advise my children to take that same route. It would absolutely, and is absolutely, I have small children, so they're still elementary school age. I would absolutely do way more research on whatever institution they intended to go to. And then, of course, we have financial plans in place to be able to assist with paying for school for them wherever they decide to go. But there has to be, and then sometimes there's a lot of shame around that conversation because I'll speak about the States. There is a culture in the United States that, I should be saving for my child's education, and I'm saving for retirement, and I'm saving for this, and I'm saving for that. When all the studies show that here in the States, the majority of the United States citizens cannot even afford a $300 emergency. So this culture and pressure to, I'm saving for and the conversation, yeah, of course I'm saving. Yeah, I got savings. People really don't have those savings. College is very expensive. The idea that I'm going to save all of this money and then write a check and give it over to the school may be realistic for some. It's not necessarily realistic for the average citizen, no matter if you are an African citizen. I couldn't imagine being from another country and come here and be like, what is this system? What is this? It's not set up for me to succeed. This system is set up for me to just be a part of the motion of this system. And I feel that as a person born here, that
You know,
what is this system?
having been a banker myself for so many years, I couldn't agree more. I mean, sitting behind those accounts and seeing, it's often you find those who who are wealthy, you cannot identify them. They come in really looking like they're not so very unassuming.
Mm-hmm.
Those who don't have the money, it's amazing. They're the ones who are flashy and
Mm-hmm.
everything.
Mm-hmm.
And so you think you are amongst people who've got a lot of money, but they really don't.
Yeah.
It's a lot of
And
cards which have been
very true. 100%. I couldn't agree more. There is and I say this a lot to clients. We as people of color, as Black people, as African people, we did not create these systems. We can master them. We did not create credit. We did not create it is very clear that these systems here in the States were made and created for oppression of Black people, continued oppression. However, we can still master these systems, even though they were designed for us to continue to be oppressed. We can still master the system. And that's what it's about for me when I coach and I talk to clients. Master this system. Don't allow the system to dictate to you what you can have, can't have, can do, can't do. Okay, I see how it's set up. I'm going to use my creativity. I'm going to use the power of my mind. And then, of course, our God-given spiritual wherewithal to move forward through this system in a way that allows me to master it, to overcome, to get the things that I need and I want. That absolutely can happen. And we can see examples of that every day, that can and will happen.
So the Biden administration campaigned on a promise to offer debt relief, especially student debt, but a lot of their efforts at debt student loan forgiveness have met with resistance from the courts. The courts have pulled them down. Now the SAFE plan has been instituted. Talk to us about this plan and what's in it for us in terms of the income-driven component to it, how it helps even those trying to see how they can get loan forgiveness. Just talk to us about the SAFE plan. What is it?
So the SAVE plan will replace the former repay plan. So if you, and like I said, I have student loan debt. I'll use myself as an example. Before this SAVE plan, the income-driven repayment program for student loans was called REPAY, REPAY. I think there was an E on it. That program has been replaced with the SAVE plan. So you do not, if you were in an income-driven based repayment program before the SAVE plan, you don't have to contact your servicer to be transferred into the SAVE plan. It's automatic. They automatically put you into the SAVE program. What the SAVE program does, it decreases, and it is designed to decrease the amount of money that you pay out of your discretionary income each month to pay student loan debt. What does that translate into? That translates into if you make $15 an hour or less, so around $32,000 a year annually or less, the SAVE plan is set up where your monthly payment will be zero. Your monthly payment will be no payment at all. It'll be set at zero, but that will also keep your student loans current. There will be no interest that is compounded or gained during the time that your payments are zero. It will not be reported to the credit bureaus as if you're not making a payment. That $0 is your payment. It keeps your loans current. It keeps your loan in good standing, which is very important. And you will have to certify what your income is. So I want to be certain that people understand these are income-driven repayment programs. That means you're going to have to expose your income to your student loan servicer. Well, I don't want, typical. I don't want them to know all my business. I don't want them to know what my income is. That's going to raise my payment, blah, blah, blah. However, what happens is if you don't give your income information, every time I've seen people end up paying more than they should have been under these plans. So I'll give you an example. I'll use myself as an example. Before COVID, when there was the freeze on student loan payment, my student loan payment, monthly payment was about $110, like $110. Then there's the freeze because of COVID, so no one's making a student loan payment. Now that the freeze is coming to an end at the end of this month, my new student loan payment, monthly payment, is $35. If I had not have agreed to give my financial income to my student loan servicer, it's a high possibility my payment would have remained at $110. I do not want to give them $110 if all I got to give is $35. That's more money in my pocket for me and my family. It is important to cooperate, fill out the application, submit your W-2s, submit your payroll statements so that you can take advantage of this plan. How did my payment go from $110 to $35? Am I making less money? No. Under the SAVE plan, the amount of discretionary income that can be accessed to calculate your payment has decreased. So even under the Biden administration, the discretionary income cap was 10%. Under this new plan, it's 5%. So before, let's say you had what they consider $1,000 in discretionary income per month, the cap is 10%. They're going to go for the cap. They're not going to say, well, we could take 10%, but we'll just charge you 8%. They're not going to do that. They're going to go for the highest amount. If you have $1,000 in discretionary income per month, the cap on that is 10%. That make your payment $100. Under this current plan, that cap for 10% has been decreased. It's been cut in half to 5%. So where you had $100 payment before, you could have a $50 payment now under this new plan. Also under the new SAVE plan, if you were making payments before COVID, before the payment freeze, and now that the freeze will be up on August 31st, under the SAVE plan, there is a 12-month on-ramping payment period. What does that mean? The Biden administration has understood that people have not been making student loan payments for the last 2-3 years. And it's just like, well, I've been allocating that money for something else. I haven't been setting it to the side. A lot of people don't have that discipline. Let me keep putting this to the side. So I've been using that money for other things. Maybe I started my kid in swimming lessons. I used that $110 and my kid is taking swimming lessons now. And so now where am I supposed to get another $110 from? There is a 12-month period, on-ramping period that begins September the 1st for 12 months so from September the 1st all the way through September 2024. If you miss a payment, aren't able to make a payment late, there is no penalty for 12 months. Your loans will not go into default. Your loans will not be reported as late or late payment missed to your credit. There is no penalty for 12 months if you miss a payment or are unable to make a payment. So in essence, it's like almost another 12 months of a freeze because there is no penalty. No interest accrues if you don't make a payment. No interest accrues during that 12 months. No interest is charged during that 12 months. So as you're recalculating your budget, if you're a person who does a budget, as you're recalculating your budget, and you say, well, it's because we're about to be in the holiday season any day now. Holiday season is coming up. I need money to travel or to buy gifts or to celebrate with my family, and we have dinners and blah, 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 blah. I really don't want to even give them $35. So you can potentially not make the payment. It won't be reported to the credit bureaus. It will not cause your loans to go into default. You will not be marked as delinquent. You will not suffer any penalty or interest.
And
So
this is missing one payment or missing several payments within the 12-month period?
Within the 12-month period, let's say you don't make a payment for 12 months, there's no penalty. Okay. Let's say in that 12-month period, you like, okay, I can try to work this out and make my payment. But you miss a payment. It's a birthday. Maybe you forgot. Maybe it's not on auto pay. You forgot. There's no penalty for missing a payment in that 12-month period. So from September 2023 to September 2024, there's no penalty.
So what's the incentive to make a payment then?
So that's an excellent question. If you are intending to purchase a home in that period, you've been preparing your credit, you've been saving, you've been doing your homebuyer education, and you want to purchase a home. To purchase a home, you have to show to your mortgage loan lender at least 3 months of payments. So there's an established number of how much your student loan payment is. You can't go to your mortgage loan officer and say, oh, well, we were on a freeze and nobody was making payments and I wasn't making payments either. Because you can do that. But what will happen is for a mortgage, your mortgage loan officer, if you're approved for a conventional loan, they're going to count 1% of total student loan debt toward as a monthly payment. If you are approved for FHA loan, they're going to count 0.5%. What does that translate into? Let's say you have, we'll go with a conservative number, $10,000 in student loan debt. No, we need a higher number. Let's say you have $20,000 in student loan debt. So 1% of that as a monthly payment is $200. But under the SAVE plan, your real payment is $35. You would rather have them calculate $35 in debt rather than $200 in debt. That $200 in debt is going to increase your debt to income ratio, which decreases your home affordability. You want that $35 payment calculated. Like, no, I don't need you to calculate $200 a month because that's not what I pay. I pay $35 a month. Okay, you'd rather have that. And you need to show at least 3 payments when you go to mortgage to apply. If you did a FHA and they say we only take 0.5%, that same $20,000 in student loan debt, instead of a $200 payment, they're counting a $100 payment. But you really only pay $35 a month. Your calculated payment under the SAVE plan is $35. You want that $35 payment so your debt to income ratio isn't as high. You want the lowest payment that you can. You want to go into mortgage with the least amount of debt as possible so that your affordability, especially depending on which city you live in or state you live in, we're over here on the East Coast, you need as much affordability as you can get. If you're out in California, we all know you need as much affordability as you can get. You know what I'm saying? Maybe somewhere else, if you're in middle America, it may be a little different. But if you're over here on any of the coasts, you want as much affordability and as small a debt as possible for mortgage. So that's why it's important to submit your income information and have an accurate idea of what your payment would be. And I don't know anybody who doesn't. I don't want to pay more than I have to. I don't want to do that. I want to keep as much money of my own money that I earned as possible.
So after the 12 months of payments, what happens?
After the 12 months of payments, what happens is the full program kicks in. And what does that mean? You still have the 5% of discretionary income calculated. If for any reason, so before this program, if you missed 3 or 4 payments, they automatically started your loan going into default. Under this new program, it's not automatic. They're going to try to certify you first. Now, if you're the person that's I'm ignoring loans, I don't care about student loans. I've personally forgiven myself from student loans. They're going to go into default. That's a whole nother situation. But if there's a situation that comes up that you cannot handle, there are provisions in the plan that will allow you to miss payments without a penalty. Cancer treatment, if you are deployed for any reason, if there's periods of unemployment, but you have to make sure that you communicate that to your loan servicer so they can activate those provisions in the program for you.
All right. So I'm really glad that there is the provision within the loans to not just make people say, oh, I'm protected, I don't have to pay at all. There is an incentive if you're making the payments and doing the right thing. It's not the same as someone who isn't and taking advantage of those provisions. Yes, they are there to make sure you're not in default.
Right.
But there are consequences. So talk to us about the loan forgiveness component of the SAVE plan, please.
So the loan forgiveness component, and I have clients, actually my sister received her letter. I have plenty of clients and friends who have received their letters. If your student loans are over 20 years old, they're forgiving those loans. Whether you were in default, I had a client yesterday text me, oh my God, I got a letter, all my student loans are forgiven. Now, she's worked in public service her entire career. However, she also had been in default most of that time. She hadn't been making payments, but she literally just received her letter yesterday and sent me a copy of it that all of her student loans were forgiven. They were over 20 years old. So, and then I want to say this as well. When she sent me the letter, she was just so excited and overjoyed and was like, I cannot believe this. And I went back in some of our messages and looked at some of our previous correspondence. Earlier this year, she was very frustrated. She's like, this is just taking so long. And I don't think they're going to forgive my loans. And I just don't know. And she was doubtful. I'm saying that to say it does, when you think about the amount of borrowers, it's going to take time to get through the system to issue the letters and put all of this information into the system. If you know you've been making payments for over 20 years, it's literally just a matter of time. If you know your loans are older than 20 years old, it's literally just a matter of time before you receive your forgiveness letter. If your loans are not 20 years old, if they're 5 years, 10 years, the forgiveness comes after. If you took out your original loan amount was $12,000 or less, you have to be enrolled in the SAVE plan and making payments for 10 years for the forgiveness. If your loans are more than the 12,000 and you've been making payments, the forgiveness comes in the SAVE plan. It comes after 20 years. So it does take time, but the forgiveness is real. If you work in public service, if you work for a nonprofit, a qualifying nonprofit, then you can go to the studentaid.gov website, go into the employer search tool, search your employer, and it literally will come up and say whether that employer is a qualifying nonprofit or non-qualifying nonprofit. And that means that so I'm going to use my area as an example. I live in Maryland. We're really close to Washington, D.C. Washington, D.C., of course, is where the Capitol and the White House and Congress and blah, blah, blah. There are so many nonprofits in D.C. A lot of them are non-qualifying because why? They're for political. They run through a lot of cash. A lot of the lobbying firms are nonprofit, but they don't qualify because why? They aren't doing service to the poor and the sick and the shut-in. They're qualifying as nonprofit for tax breaks, but they run a for-profit business. I'll use my sister as an example. She works for an arm of Blue Cross Blue Shield. So Blue Cross Blue Shield, the arm she works for is Blue Care Network. They're a nonprofit, but they make a lot of profit. They're a non-qualifying nonprofit. So every nonprofit doesn't automatically qualify you for public service loan forgiveness. It has to be a qualifying nonprofit. How do you know? How would I know? You can use the search tool and put in your employer. They ask for the employer's tax ID. Where do you find that? You can find it on your pay stubs. You can find it on your W-2s. You can find it on your tax returns. You can literally you can put it in Google. What is the name of my employer tax ID? It will pop up because it's public information. It'll pop up and put that tax ID in the search tool, and it'll tell you whether or not that employer is a qualifying nonprofit. So you're looking at a government entity, a city, county, hospital, school, organization like Operation Hope is a qualifying nonprofit. Typically, any organization that is offering services for free and genuinely offering this to you for free will be a qualifying nonprofit. Non-qualifying nonprofits are typically nonprofits that offer a service that the clients have to pay for. And so that's a very general rule. You'd be like, well, I work for a nonprofit. Yeah, I work for a nonprofit, but if you guys charge, you're probably not a qualifying nonprofit. And then the public service loan forgiveness comes after 10 years. Also, even if it's part-time, I'm sorry, put that in there. If it's full-time nonprofit, if it's part-time nonprofit, both qualify.
Wait. You say even if the people work even if you're employed for a nonprofit, a qualifying nonprofit part-time?
Part-time. Wow, you can still use that time to qualify toward public service loan forgiveness.
Excellent. And how do they go about? So you mentioned going to the website to find out if it's qualifying at the same location where you find the applications for that program, the debt forgiveness.
Yeah, you want to go to studentaid.gov. The public service loan forgiveness application is right there on the website. And there's two parts to the public service loan forgiveness application. There's the part that you fill out, and then there's the part that your employer fills out. Once your employer fills out their part of because they're just verifying that you were or are employed for them. They fill that part out and submit it back to you, and then you submit it to Department of Education. So my client who sent me her letter yesterday, I want to say it had been 15 years. In 15 years, she had worked for 6 nonprofits. And she had to go back and forward the application to each one. Several of them, she had only worked for them part-time, but she went back and had to get it for each one and submit it. And like I said, she hadn't made, I made my payments perfectly over 10 years. That was not the case. When she signed up for Operation Hope for coaching, her loans were in default. Her loans were not current. However, she had over 10 years of public service loan forgiveness from 6 different employers. Some of it was part-time. She got applications in from all of them, submitted all the applications, and just received her letter yesterday.
Excellent. So once you submit those applications, what happens? Do you wait to is it processed? Do you immediately, say you've already done the 10 years, do you immediately get, maybe stop paying and wait to hear, or keep paying? And if you keep paying, do you get reimbursed for the difference? And please go ahead, just walk us through, please.
That's an excellent question. So, and I'll use my same client as an example because we've been working together over a year. So I'm really familiar with her situation, and it's perfect for this conversation. Because her loans were in default, when she applied for public service loan forgiveness, she had to bring her loans back current. How did she have to do that? She had to do 2 things. She had to do a consolidation and an income-driven repayment program agreement. So she had to submit proof of her income as well as reconsolidate the loans. When you do a loan consolidation, that wipes out all of the negative history of being in default and not paying the loans. It brings all the loans current. That's what the consolidation does.
Wait. So someone hasn't been paying on time. They are in default. If they do a loan consolidation, pretty much bringing their loans into one loan and making the payments affordable and start paying, by doing that, it wipes off that history of non-payment. Yes. And what happens to that time? Is it given to them as credit?
It is still given to you as credit.
Wow.
Because you've had the loans during that default period. The loans were still yours. They're still in your name. For whatever reason, the loans were defaulted on, the payments were defaulted, but that consolidation brings it all current. That time is still counted toward the 10-year forgiveness or the 20-year forgiveness under this plan. It is still counted toward the 10-year forgiveness or the 20-year forgiveness. So this client was in default. Of course, she was not making payments during the freeze, the COVID freeze. We had to get her loans current. So we did the consolidation and the income-driven repayment program, which brought her loans back current. Her loans became current during the freeze. So during the freeze, she didn't have to make any payments on her now current loans. This client also was in the process of purchasing a home. So she needed to make 3 payments at least for the mortgage. As she went through that process, when they revisited her loans for forgiveness for public service, her payments made during the freeze to help her get the mortgage, all of those payments were refunded back to her.
This is amazing information. Mm-hmm. So,
And this is all current. This is all recent. All this happened in 2023. All of this has happened this year. So this is not like 2 years ago or 5 years ago. This literally just happened less than 12 months ago. This has happened during 2023.
and a lot of it is coming into play next month when the SAFE plan is brought into effect
Yeah.
and payments have got to start. But okay, so talk about those who are in deferral, those who are still going to school. Should they apply? Should they apply for the income driven and get themselves in the SAFE plan, or should they wait until they finish school to start considering and then they are now required to pay? Please.
I'm going to say that's a case by case basis, because some people are back in school but work full time. They have income. They could realistically make a payment. Some people, younger people, are in school full time. They may have a part-time job, but they are not in a position to make a payment. Under this plan, the full-time student who maybe works a part-time job is more than likely going to have a $0 payment. However, they're still in school. Maybe they're a junior or senior, they're still in school. So it really, I won't say, it really would be up to them, because they're under the deferment for being in school, so they're not responsible for a payment. But some people become, I don't want this debt to continue to build, and I need to make a payment toward it, and I want to get started. Or maybe while you're in school, you're working for a nonprofit and you want those years to count toward the 10 years of public service loan forgiveness. So it's just about what your personal situation is. I don't want to give a black and white answer for that question, because it just depends on your situation.
So you're telling them apply, go ahead. Well, you're saying based on your situation, probably if you can make the payments, go ahead and find out how apply into this, to get the income driven aim and structure set up for yourself. And if you can afford it, start paying.
Yeah, because what'll happen is you're starting to make payments toward the number of payments required for forgiveness. If that is the aim, if you have a mountain of student loan debt and there's no way I'm never going to be able to pay this off. Like I need the forgiveness. That's important for me. I would start that clock. If you don't have as much student loan debt and you're still in school full time, and that's not a concern, then it just depends on the situation. So I want to be very careful about saying, oh yeah, get into the program or not.
Now, what if another administration comes up and changes this program, which is kind of what happens when one administration leaves office and the next one comes and decides they have a brighter idea, or they didn't like a certain plan so much. What happens?
I would say it's important to do your research on who you're voting for. I'm gonna try not to get too frustrated while I answer this, but it's important to listen for buzzwords. If you're not a person that's going to research buzzwords that should make you nervous. I'm running a campaign where I want to abolish the Department of Education. That means my plan is going to be abolished. My forgiveness is going to be abolished. My low payment is going to be abolished. That's a buzzword. Automatically abolish education, abolish Department, because the Department of Education is who manages and runs these programs. That's important. If there is a candidate that is anti-education, They are also anti-student loan forgiveness. Believe that. Like they don't go hand in hand. I'm anti-education, but oh yeah, I'll leave this program in place for you guys not to, so you can get your student loan forgiveness. There's no such thing. So it's just very important to be conscious of who you're voting for and go vote. You have to vote. If you have the right to vote, you should definitely exercise that right. It's important.
I want to ask a little bit more about being in default. How does that really affect your ability to take advantage of any programs that are being offered when you're in default? Just help to explain what being in default really would mean.
Okay, so being in student loan default just means that you have defaulted on your repayment agreement. And it's the same as if you have a vehicle and you stop paying and they want to repossess your vehicle. In this case, they can't take back the education they gave you. But so what happens is reported to your credit. It could ruin your credit. Back in the day, if you had student loan debt, it was very difficult to purchase a home. A lot of that has changed, but one thing has not changed. If your loans are in default and it's showing as defaulted on your credit report, that is a hard stop for mortgage. They will not move forward. Being a student loan default can ruin your credit score, because what happens is those loans then go into collection, or they're transferred to the default unit of your servicer. And when loans are in default, your wages can be garnished. Full disclosure, before I had my oldest daughter, she's 12 now, but before I had my oldest daughter, I won't say I wasn't serious about making money or my career, or I was still working on the dream career that I had. So it didn't pay a lot of money and I wasn't worried about it. I didn't have a lot of responsibilities at the time. I had student loans, but I didn't really worry about it or making the payments, blah, blah, blah. Then I had my daughter and life became more serious. I was that person that the minute I found out I was pregnant, it was like a light bulb went off, like, oh my God, I'm responsible for this life. I need to get my life together. I need to, get a good job and get insurance. And so I was not living like that before, and I didn't worry about the student loan payments. So once I had my daughter, figuring out the financial aspect of being a parent, being responsible, and having a family, student loans were not still on my radar. I'm saying all that to say I ignored my student loans. And what happened? I was working and all of a sudden I got a letter. Hey, we're going to garnish your wages. And I was just like, they can do that? Yes, they can. And my wages were garnished. This was about 10 years ago. My daughter's about 2. It was about 10 years ago. And the frustration of having to work and then see that money just snatched out your check made me much more aware of, okay, I need to develop a financial plan. So that's how default works. When they threaten to garnish your wages, they really will garnish your wages. You'll look at your check and the money is missing. And you have to go into a repayment program. You have to still, the wage garnishment does not automatically get your loans out of default. You still have to address it. It does not. You still have to contact your servicer, agree to a repayment program, make a certain amount of payments before the garnishment is even released. They say, we'll take your tax return. They really will take your tax return. Now, at the time, I had never owed taxes. I'll get a refund every year. So my thing was, this is how much I'm calculating that my refund will be if I file taxes and you take my refund. And I asked the servicer this. If I file my taxes and you take my refund, will that get me out of default? No, it will not. So if your loans are in default, it's better to be proactive, do a consolidation, an income-driven repayment program, get your loans out of default, because the consequences are real. I'm telling you this from personal experience. They will garnish your wages. And if you file taxes and you get a refund, they will take your refund, and none of that, the garnishment or the tax withholding, will not take your loans out of default. They just took your money and you're still in default.
Do they apply it to the loan though?
They apply it to the loan, but it doesn't make a dent. It doesn't get your loans out of default. It doesn't stop the interest. It really is not a good, they're taking the money out of my check and they took my taxes, so I should be good. Trust me, you're not good. So it's better to just do the
right thing the first time.
Yeah, just get it right.
Part of the process.
Yeah, just advocate for yourself. Call the loan servicer. Hey, this is what's going on. I need to fix this. Submit the paperwork that they're asking for, financial information, and get your loans out of default. Is much better. It'll work out much better.
So do you have any final words for our audience with regards to how to approach the SAFE plan?
So if you were already in an income-driven based repayment program before COVID, you have automatically been transferred into the SAVE program. They made that automatic. If you were in an income-driven based repayment program and you make less money now than you were making then, you're going to want to do a new income certification with your loan servicer to decrease your payment. If you were married and applied for income-driven repayment program and they made you include your spouse's income to calculate your payment under the new SAVE program, you don't have to do that if you file separate taxes. So some married couples file taxes separately. If you file taxes separately, you don't have to claim your spouse's income anymore. You can just do it separate based on your one income. I'm going to say be certain to go to studentaid.gov as well as the Department of Education website. I think it's ed.gov, but I'll email the information so you have it to give to the viewers. But you want to be certain to, I got a mountain of student loan debt. Even now, as I'm talking to you guys, I have a lot of student loan debt. You have to stay on top of it. Is it frustrating? Yes. Is it annoying? Yes. Is it just ridiculous, like to loan an 18-year-old this much money and then all these years later it's increased by interest and you still making these payments? I agree with all of that. Is it fair? I agree with every argument. However, to master this situation and increase your financial standing, you just got to stay on top of it. You have to be willing to face it. You can't fix what you won't face, so you got to face it. So those are my final words.
Thank you so much for taking our time out of your precious time off to talk to us and our audience about this very, very important. Whenever it concerns money, it is that important. And we will have your information available for those who would like to contact you directly for assistance and personal guidance and coaching and to attend any of your seminars you're offering. Thank you so much for your time. And viewers, I hope this information helps you take advantage of the SAFE plan. And until next time, be sure to subscribe to our channel, like our videos, and share. I'm Marilyn Ndoakono. Have a great one. Bye-bye.